evening, members. I, on behalf of the management committee, welcome you all. I welcome you all for the study circle meeting of the subject ITC Simplified from theory to practice. And to dwell on this subject, we have Suresh J W, and I request the chairman, CA Manjunath, to escort the speaker to the dais and welcome him to the floor. Thank you, Chairman Sir. Members, I have the privilege to introduce to the speaker, Mr. CA Suresh J W, holds a Bachelor of Commerce degree from the Karnataka University, Dharwad, and is qualified since 2004. Mr. Suresh is also a law graduate and has completed his certificate course on GST from the Institute of Chartered Accountants. He is one of the partners of a medium-sized firm in Bangalore. He is into indirect tax practice since 20 years. His expertise includes indirect taxation and litigations and provides valuable advice to many multinational companies. With this brief introduction, I present before you CA Suresh J W to simplify the ITC with the practical experience. So, thanks as always.
First of all, I thank Bangalore branch of SIC for giving me an opportunity to speak on this topic, ITC Simplified from theory to practice. I thank Mr. Manjunath and his team for inviting me to talk on this subject. Thank you, sir. Thanks for the introduction also. So, let's start. ITC. ITC is not a new thing in the GST. We know ITC quite since long time. We had in excise laws ModVat initially during 1986 onwards, and afterwards we had SenVat credit, and even in service tax also we had SenVat credit. And in VAT credit, so all the states had different VAT laws and different ITC provisions. And now luckily from 2017 onwards, one GST across nation from Kashmir to Kanyakumari, we have only one ITC, whether it is Karnataka, Tamil Nadu or whatever state. So only one ITC we have. So, couple of questions before starting off this one. The basic one, so is this ITC a seamless credit we have? Do we have a seamless credit? First of all, what is a seamless credit? Like, I'm a business person, I go buy goods or receive the services, and I should get credit. No question being asked for that. Is that a seamless credit? If you are thinking like that, it's not possible at all. So we have several conditions attached with the ITC of the GST. So because of that, we have to go through all the sections and rules, notifications, circulars, to make this ITC simpler. And one more thing, before getting on to the topic, See, the GST, we have three major acts. We have the CGST Act, corresponding the SGST Act, and also we have the IGST Act. Right? All these three acts are a basis for the GST structure in India. So one question, so I want to take a credit of IGST, like I buy goods from outside the state, or I import from outside the state, and I want to take a credit of that. So which act I should refer? Can I refer IGST Act? The answer is no. So whatever input credit we are discussing today is everything is there in the CGST Act only. We are not at all referring to any of the provisions about ITC in the in this seminar about the ITC from the IGST Act. IGST Act we are not at all touching, because IGST Act does not provide any provisions relating to the input credit. This is only the CGST Act. Okay. So with this brief introduction, so let's get started. So what is it I am going to cover in this whole maybe 2-hour session? I will just brief you in maybe 5 minutes time. Okay. So we will study about basic definition of input credit. Then we will study section 16 to 21. Section 16 deals with eligibility and conditions for crediting credit. What are the conditions required to take a credit? We will discuss in section 16. And there are some provisos and some other issues relating in section 16. Then section 17, apportionment of credit and block credit. Then 17.5 is one of the important sections which deals about the block credit, input credit restricted is discussed in 17.5. Then section 18, there are some special cases how input credit is dealt with. So in case of maybe a new registration, or if you are opting for competition scheme or exiting from the competition scheme, what is the some special provisions are there in the section 18. In section 19 is relating to the ITC in case of a job work. How ITC is taken in case of a job work. I send a goods, I receive back, and all those things. How the ITC is dealt is there in section 19. Then section 20, which is mandatory applicable from April of 2025. So we are going to study about the ISD, input service distribution. All these days it was not compulsory. We can get away with the ISD registration through cross-charge provisions. So all those things are not there now. So 1st of April 2025, ISD registration is compulsory in some specified cases. So then section 21, again relating to the ISD. Suppose if you have distributed wrongly excess, how you have to recover. These are the chapter 5 of CGST Act deals with the input credit. Then we have a set of rules. Rule 36 deals with the what are the documents requirement. Then rule 37 in case of reversal of ITC in case of non-payment. Rule 37A reversal of ITC due to non-payment of tax by the supplier. So ITC in case of banking companies, how banking companies we deal with the ITC that is there in the rule 38. Then rule 39 ISD distribution procedure. Okay, then 40 manner of claiming credit in special cases as is there in section 18. Related to that rules is 40 and 41. So see there is a merger, sale, non cases how ITC is transferred from one unit to other units. This is there in the rule 42, 41 in case of, I have one registration present in the state and I take one more registration in the same state because of, different line of business like that. It's allowed. So I can have a 2 GST registration in the same state. So how should I transfer a credit relating to that one? It's for rule 41A, discusses about that. And rule 42. Rule 42 deals about common credits. If I am dealing in exempt return number as well as tax return number, so I need to reverse some of my credits. That is discussed in rule 42, in corresponding to section 17.1 and 17.2. And rule 43 in respect of same capital goods, taxable and exempt return number, is discussed in rule 43. And rule 44, some special cases, whatever there in section 18.4 and cancellation of section 29.5, connected to the touch rule 44. Rule 45, conditions and restrictions on the job work. So the next one is practical application. So all this, just now whatever I discussed is all about theory, rules and sections. Now the practical, how we have to file the 3. It will be quite simple, but in some special cases, like you have a temporary permanent reversal, you have temporary reversal, and how to reclaim the temporary reversal. All those things we are going to discuss in this sheet, and then some case studies if time permits. Okay, so let's start. So section 2, subsection 63 of the CGST Act. I said no definition of input credit or provisions in IGST Act. So whatever we are referring is only CGST Act. Section 263 defines the input tax credit. Input tax credit means credit of input tax. It's a very simple definition. So we have to see what is input tax. See, input tax, again section 2 subsection 62 of the CGST Act says input tax means central tax, state tax, integrated tax or union territory tax charged on any supply made to him and includes IGST charged on import of goods, RCM payable under section 9 subsection 3 and 4 and RCM payable under section 5 subsection 3 4 of IGST Act, but does not include competition, tax rate under competition in the scheme. So you see this input tax definition includes central tax, state tax and also integrated tax. It means whatever invoice I get from my supplier for whatever value, they charge GST. So if it is a IGST, that is also covered in section 2 subsection 62. I need not go to IGST to take the credit of IGST credit. IGST Act I need not refer. So it is there in section 2 subsection 62. And also if it is a union territory tax, if we are in the union territory tax, we can take credit of the union territory tax. And what all it includes? It includes IGST charge on import of goods. If I import from outside India, I can take credit of IGST charge on imports and RCM payable under section 9.3 and 9.4. We have modification 13/2017 and in case of IGST, modification 5/2017 deals with the whatever RCM we have required to take, maybe advocate service, cab service, GTA, all those things comes under 9.3 and 4. Anything paid in 9.3 and 9.4, automatically it becomes ITC. First of all, you need not think at all. Whatever you pay, RCM RCL, it is ITC as per this definition. Then we study again, we will discuss about 16, 16 and 17. If it is restricted there, then this is not an eligible ITC. So, as far as the basic things are concerned, it becomes ITC the moment you pay under anything under the RC, maybe import of service. Okay? And does not include competition scheme. If anything, pay tax paid under the competition scheme. Anyhow, see, it is only a supplier makes a payment to the government. There is no question of any tax making a payment by the receiver of the supplies. So, but anyhow, in the definition specifically says any tax paid under the competition scheme, it is not an RC. Yeah. Okay, this is about section definition section. Next, the legal provisions. So we have chapter 5 deals with section 16 to 21 of the CGST Act. So section 16, eligibility and conditions of taking ITC. So we referred section 2, subsection 62 and 63. We say whatever is inward supply for you, everything is ITC, correct? But connected with that, there are some restrictions. Section 16 deals with the conditions for taking the credit. 16.1, supply of goods and services is used or intended to be used in the course or furtherance of business. Whatever input credit you take, first of all, it has to be in the course or furtherance of business. If it is not for the business, so you cannot take credit of the same. It has to be for the furtherance of business. So then section 16.2, further conditions. He is in possession of tax invoice or debit note issued by the registered supplier. I should have a tax invoice with me. Without tax invoice, I cannot take an input credit. Next, the details of the invoice or debit note has been furnished by the supplier in outward supply statement. So that ESTR 1, whatever return we file. So apart from having an invoice, I should also have, the supplier should have filed GSTR 1 return. Okay. The next one, he has received the goods or services or both. See, first thing, I should have a copy of invoice. The supplier from whom I am buying, he should have uploaded the statement of outward supplies in GSTR 1. And the next one, I should have received the goods or services. I will tell you a situation. So today, 30th of April, goods are dispatched from Maharashtra. I am about to receive the same thing tomorrow. Tomorrow being a holiday, my office is not working. I am going to take the delivery on 2nd of May. It's a working day. So can I take a credit in the month of April? No, the answer is no. I should have received the goods before 30th. Then only I can get the credit of the sale. And there is an exception to that. It's a bill to ship to case. What happens in the bill to ship to case? There will be 3 parties involved. So I tell my supplier in Mumbai to deliver the goods to Chennai. So supplier at Mumbai or Maharashtra will send me an invoice. I GST invoice. I in turn make an invoice to the Chennai person. Right. So here I don't receive the goods. Still I am eligible to take a credit of that. So because of that, so in case of bill to ship to case, this goods received, condition is not there. I need not receive the goods to take the credit. Okay. Next, he has furnished the return under section 39. Generally, that is the condition of debtor, GST 3B. So I should, I can take credit only when the return is filed. Like we have related rules for this. We'll see how it works also. And we have some provision for this 62. the first proviso says if the goods are received in lots or installments, in that scenario we should be able to take the credit on the receipt of last installment or last lot. Say an example, whatever I gave, that supply from Mumbai to Bangalore. So he will send 3 shipments, one invoice only. So one vehicle starts immediately, one vehicle maybe 2 nights late tonight, and one more vehicle tomorrow morning. Okay. All 3 vehicles I am going to receive in the subsequent month. Or suppose one vehicle I receive in the same month only. Can I take a credit of that? No. I should receive full loss. Then only I can take a credit of that. This is related to the 16th first provision. And the next one, fails to pay to the supplier of goods or services. So I should pay to my supplier within 180 days from the date of invoice. So if I don't make a payment to my supplier within 180 days from the date of invoice, I cannot take credit of that. If I have taken, I have to reverse that. Okay, that is there in Rule 37. And when we are reversing, we have to make a payment with interest also. Okay. And the situation here, I get an invoice. I don't account at all. I don't take credit at all. I just keep it in my box. And after the 6 months, I realize, yes, that some invoice is missing. Can I take credit of that? Yes, can I take a credit of that? Any invoice which is already 6 months old? The answer is no, because it says I should make a payment to my supplier within 180 days. I will not make a payment at all. Where is the question of taking credit of that? It is not from 180 days from the date of accounting. 180 days from the date of invoice issued by the supplier. So we have to be very careful here. It is not from accounting date. So we should be, because maybe sometimes I get an invoice, I get it approved because of some process involved in that. I take a credit after 1 month and I don't pay at all. If 5 months over and it is 6 months from the date of invoice date, so I have to reverse ITC on that one with interest also from the date of accounting or from the date of invoice, whichever is latest.
So,
yes, sir.
see that after if I don't make a payment within 180 days, automatically it gets
Yes, sir. Yeah.
Subsequently we make payment.
Yes, sir.
Can we get that credit?
Yes, sir. The proviso to next proviso of this is recipient shall be entitled to avail the credit if payment is made to the supplier. Next point.
No, sir, I was asking with the interest can be.
No. Interest, you are asking about interest, sir?
No, but availing the main.
Yes, yes. I can take the credit when I make a payment. Yes, sir.
Sir, that previous slide, you said need to ship the case,
Yeah.
but the customer bring from the Mumbai to the Bangalore
Yes.
and they ship to the Chennai. And you said that there is no receipt for the receipt of the goods for the
Yes.
customer,
Yeah. Not customer, for me.
for me. But if the goods has not been received by the customer, should I take eligible to take it?
See, how will you make a payment without receiving the goods to
Some
us?
problem has happened in the country, the goods had lost. In that case, that I will be taking the university.
Okay, so see, we think from the point of view of the Chennai person. Chennai person, he should receive the goods to take the credit. Only for me it is an exemption. Okay?
This is into this goods only. Because once he doesn't receive it, I cannot also tell him.
Yes. You will not pay at all, no. Whatever it is, if insurance is there, some issues are there, so whatever it is. But technically speaking, so you should receive a goods to take the credit. And for me, because I am only an intermediary person, I ask my supplier to send the goods to my customer. So I cannot, the condition is not there. See, in the, hypothetically, in general, nothing is happening. Same here, he will send the goods, he will receive goods. I am going to bill again to him. In that situation, so I need not receive a goods to take a credit. That is the general exception.
Section 9, section 4, notified services.
Yes.
Suppose watch and wall security services is listed as the reverse charges.
Yeah.
Suppose the security agency is charging under the forward charge and the customer is claiming, recipient is claiming this tax.
This RCM is applicable only from, what is it? If it is
Security services.
company,
Yeah. Registered person.
yeah, if it is, no, not registered person. I think if it is a company, then he can charge tax. If it is an other than company, he cannot charge. That time only RCM is applicable.
No, it is other than, it is a partnership firm.
Okay.
The supplier is a partnership firm.
Yes.
And it is charged on the forward basis.
Yes.
We are recipient, we are
Yes.
claiming it.
Yes.
But the department can ask to pay the RCM.
No. What is the this one? Basically, what is the RCM provision?
RCM says
When RCM is applicable?
this notified services,
Yes.
GTA and all these things, they never say unregistered person. They say registered person supplying these services, lawyer.
No. See, all other RCM is different. This security is different.
No, sir. Security is
In case of securities, only if it is a corporate providing the service to the business organizations, then RCM is not applicable. If it is other than the corporate, RCM is applicable.
Partnership.
Oh, yes, applicable. If it is a company, then RCM is not applicable. Just check out.
Sir, interest will be charged from under section 50. From
Yes,
the
sir.
date of invoice or from the date of filing of
See,
the
maybe it's not clear, sir. So maybe when I avail, I have to pay.
So what is the practice from
When I avail, because see, I have availed, and also section 50 is now very clear. I should have availed and utilized also. Well, just I have availed, I am not utilized also. I am sitting 1 crore, credit. I have not utilized at all, so I need not pay. And next 16 subsection 3, in case of capital goods, if the depreciation is claimed under income tax provision for plant and machinery, then ITC is not allowed on the tax portion. Okay. And next 16.4, ITC cannot be claimed after 30th November of the subsequent financial year. Whatever ITC we are discussing, we can take credit of that only up to the 30th November of the subsequent financial year. So this is the time limit fixed by section 16.4. I cannot take credit after 30th November. Technically, it is October return when we file 20th of November. That should be the last day to claim my credit. If there is any delay in the return filing, that also has to be before 30th of November. I cannot take credit anything beyond that. Maybe a question may come, oh, I have not missed out credit here, can I claim it in the annual return? So law is very clear. So maybe some high court, later some high court judgments are there, so it should be allowed like that, but it's not clear. Maybe for some specific cases there may be some relief, but it is not a general relief at all. So any input credit you want to claim, you have to claim only through 3B only. There is no any other forms applicable for taking credit. It has to be only 3B, and that too before 30th November of the subsequent financial year. And next 16.5, there is some. This is 2024 budget changes. So any input credit relating to 17, 18, 18, 19 and 19, 20 and 2021 also, something if you have not taken within the prescribed time limit, whatever they that time, so you can claim you could have claimed, if you would have claimed that one before 30th of November, that is okay. So department should not question about that. For example, I will tell you how it works. 17-18, that time, it was September was the due date. September of the 2018, correct? And I take in the October, I take in the November. Is that allowed? As per this 16.5, it is allowed. So anything credit you take till 30th November 2021, it is allowed relating to the 17, 18, 18, 19, 19, 20 and 2021. Not beyond that. If it is 21, 22, same our 30th November, whatever is the subsequent financial year, that is only up. Okay, any questions?
16, please.
16?
16, please.
3. That's capital goods, sir. I buy some capital goods like plant and machinery and all those things, and I can take credit of that. But if I am claiming income tax benefit on that tax also, it generally will not happen. If I am accounting person means, I will not capitalize the tax portion. Correct? I debit to CGST or GST or ITC account. So there is no question of specifically mentioning, but maybe lawmakers they are not chartered accountants. So they have specifically given this provision. Under the income tax provision, if you are getting credit of any GST component of the plant and machinery, then ITC is not allowed.
Only GST component plus.
Okay. Next, 16 subsection 6. There is also latest benefit provided. So where registration gets cancelled because of some reason, registration gets cancelled, and later it is reinstated by the order of appellate authority or appellate tribunal or any court, maybe high court or like that. So in that scenario, whatever the ITC missed during that period from the cancellation of registration till the reinstatement, that ITC can be availed. So technically what happens is, when my ITC gets, my registration gets cancelled because of some reason, I did not file the return or I did not make a payment, there are several reasons for that, it gets cancelled. And next day onwards, the person who is supplying to me, he cannot upload outward supply statement at all for my GST number. It says, so there is a person is not available. So what he has to do, he may do it as a B2C bill disclose. So I don't get the credit at all after the date of registration, that is cancellation of registration, till that is reinstated by the department. So I am going to miss that credit, no? So see here the provision is reinstated by the order of the appellate authority, court or tribunal. It means there is something wrong from the department side only, right? So there is no wrong from my side at all, but still department had cancelled during the particular period. So I get the credit of, now I should get the credit of that. So that credit, when should I take it? So if it is 30th November is already lapsed, so last year's I should take before 30th November, correct? If it is already lapsed, I get a 30 days time from the reinstatement. Okay, if it is before 30th, before the filing of the annual return or 30th, whichever is earlier, I should be credit of that. Okay. And this is all about the section 16. There is the conditions for eligibility of the credit. Then next section 17, a portion of credit and block credit, restricted credit. 17 is very, very important section from the point of view of ITC. Whatever is ITC is there, everything is allowed except what is specified in section 17. 17.5 is very important. Before that, 17 subsection 1. If goods or services used partly for business purpose, partly for other purpose, so I cannot take credit relating to the other purposes. It means whatever credit is there, it has to be for business purpose. Okay. Then next, any goods or services you receive partly for taxable supplies, including exports, and partly for exempted supplies. Example I will tell you. I am a dealer, or I am into trading of seeds. Seeds are exempted. Okay. I cannot take input trade also because my output supply itself is exempted. And also I have some other taxable goods I do. For example, some 1/3 is exempted, 2/3 is the taxable. So ITC related to the exempted, I cannot take it on, and ITC for the taxable, completely I can take credit, and the credit other than that one. So any credit which is used for both taxable supplies and exempted supplies, that one proportionately I have to reduce. Rule 42 and 43 is about this one. We will discuss in detail when we come to that particular rule. And what is exempted supply definition? Exempted supply may include reverse charge transactions, sale of land, sale of building, like that. So it is not that all the time I don't deal in my exempted goods at all. So the 17.2 and the rule 42, 43 is not at all applicable to me. Is that so? It's not so. For example, I have a building. I have a 2 office building. 1 office building I will say. So my total turnover is 20 crore rupees. When I sell that particular land and building, I get 10 crore rupees. Is that 10 crore is exempted turnover? Yes. You are required to find out common credits and you have to reverse proportionately to the extent of your exempted turnover. Okay.
Proportionate applies only to the
Common credit. So any credit you take for exempted supply, no credit. Any credit you take for taxable supplies, 100% is allowed. And any credit which is used for taxable supplies as well as exempted supplies, proportionately you have to remove that. We will discuss in rule 42, 43 in detail about this. And next one, 17.4. See, in case of banking companies and NBFCs, normally banking companies, so what is their income? Interest income, correct? Interest income, and also they charge some bank charges, maybe ATM card charges, then they issue LCs and other things, LC charges, bank guarantee charges, lot of charges, whatever they take. Interest is exempt, correct? Interest is exempt under the notification and subject to credit card interest. Credit card interest is taxable. So because of that only when credit card any charges comes there, and then GST is applicable. So what happens here? How they have to take a credit? Bank, the 95% is the interest income. Only 5% is the income from other charges and all those things. So if at all they have to follow the 17.1, 17.2 and 17.3, that is exempted supply and taxable supply, they get hardly any input credit, right? So because of that, 17.4 gives an option to go for 50% of ITC can be claimed. 50% is going to lapse. straight away they can go for this option, and 50% ITC is allowed and 50% is not allowed. And this restriction is not applicable if I receive any ITC from the same PAN number. So I have a office and I have various branches. I do some cross charge, maybe because of management services or some HR services and all those things. This restriction is not applicable for such a cross charge cases. And also now that ISD will come in such cases, this is not applicable. The general, other than that, their PAN, whatever ITC is there for that, so 50% restriction, they have to opt for that. It is not a direct allowed like that. If it is a direct means it is normal, they have to go for the 17 and 17.
What is the process to opt the 50%?
It's there in the rules. Will put that.
So the cooperative societies also can avail this.
So they say banking company and NBFC. Maybe we have to see that. See, if it is cooperative bank also, it is by RBI.
Cooperative societies, not banks.
I doubt so. If it is only banking, they have a license. Cooperative bank, they come under the RBI, so they can take this option. And 17.5 is the, it starts with notwithstanding anything contained in section 16.1. 16.1 it says you can take credit if it is for furtherance of business. If it is for business purpose, if you are taking credit, everything is allowed. That's what 16 subsection 1 says. And also 18 subsection 1 in such special cases, we will see that one later. And notwithstanding anything contained in that one, 16 subsection 1. So following cases, ITC is not allowed. So whatever we are going to discuss in 17.5, see, the GST is not allowed. Okay? Straight away not allowed. Whatever purpose you are using, it is not allowed, subject to some relaxation given in the section. Okay? And the first clause, motor vehicles for transportation of persons having a crew capacity of not more than 13 persons including driver, except when they are used for the supply of such a motor vehicles, transportation of passengers, and imparting training on driving such motor vehicles. So anybody who buys motor vehicles, so GST is not allowed. GST is not at all allowed on any motor vehicles. Okay, and what is the exception for that? I should be a dealer in the motor vehicle, buying, selling, and all those things. And I may be a transportation of business of transportation of passengers, like these travel agencies and all those things. And I am into training of, driving of such motor vehicles. In these situations, I can take credit. In all other cases, I cannot take a credit. So what about the goods vehicle? Can I take a credit? Why? Exactly. Transportation of persons. This section talks only about the transportation of persons. It's nothing to do with the goods transportation. So no restriction at all.
So if they offer FCM, they can claim.
I mean,
If they offer FCM,
what is it?
forward charge mechanism. If the client charges FCM, then the logistic companies, transport companies can claim
That
import.
is RCM is not applicable on that, no sir.
Like FCM, if they have
Yeah, it's all forward charge only. No?
yeah.
RCM is not there in
for
motor
GTA,
vehicles by
GTA.
GTA, either RCM or forward charge. In both the cases, you can take credit.
For RCM also they can claim.
Yes, why not? Definitely. See, I said the definition of 2 subsection 62 input credit. What is the definition of input credit? It includes tax paid under the section 9, subsection 3 and 9, 4 of the CGST Act. What is 9, 3 and 4 is relating to the RCM. Whatever RCM you pay, unless until it is restricted in 17.5, it is eligible ITC. It's only for the other person. 5% with input without input credit, or 12% with input credit. That's only for other person. For me, everything is input credit. I can take absolutely no issue on that. If you are charging 12%, you can claim, no? If you are charging 5%, you cannot take ITC. If you are charging 12%, you can take it. And for me, whether they charge 5% or 12%, I can take it. Clear?
Sir, but in RCM, the GTA will anyways not charge the tax. He will just write 5%.
Yes, sir, I make a payment and also I can take it.
So if I take the credit, it will just stand in a page lecture and it will not be adjusted against my taxes, right? So I can claim it because RCM anyways,
See, for example,
I'm not charging them.
No, see, there are two tax liabilities. One RCM liability, other liability. If you have other liability, the same RCM, whatever liability it becomes input rate, you can adjust for that.
But there will be no other liability, so there will be only.
No. See, you don't say anything else other than RCM, right?
That's all. It's a logistic company.
Yeah.
They are GTAs.
Okay.
And they are into transport business. And they are giving the vehicle on goods. Their agents.
So you pay forward charge is there or only RCM?
RCM, if it is RCM.
Yeah, only RCM, the other person takes the credit. You are only declaring exam.
But if they are purchasing the goods vehicle, then they can claim input your tax.
See, if your tax payable is there, then ITC. See, you have two options in your case. You are charging 5% or 12%.
5%.
Yeah. If you are 5%, then no ITC at all. So whatever you buy, ITC is not allowed in your case. If you are charging 12%, then ITC is allowed. You can take rate of whatever vehicles you buy or higher charges.
But RCM also you can take proportionately, if you have exempt and.
Yes. Whether it is common credit or not, we have to decide. If it is a common credit, see for example, transportation, you receive, and it is for only taxable supplies. Then fully can. If it is transportation charges, you take for exempt supplies, then no credit.
But you have to pay us.
Yeah, I've seen many it's a liability. So now we are discussing only about the ITC.
And a motor vehicle, two-wheeler is allowed because as per the Motor Vehicle Act, vehicle having four-wheeler is called.
I don't think so. Motor, I don't think so. All the motors, including two-wheelers, I don't think ITC can be taken. So,
Even the two-wheeler.
latest I have not read Motor Vehicle Act, what is the motor and all those things. But previously when I have read, I remember even two-wheeler also is covered in the Motor Vehicle Act. Like motor, whatever. Anyhow, our Act does not give any definition of what is motor vehicles. So we have to take a general overview. But I think two-wheeler everything is covered in the motor vehicle. Again, you can check up on that, but as far as I am concerned, I understand. So, next one. So, like this motor vehicles for transportation of persons, so vessels and aircrafts also not allowed. Any ITC connected with vessels and aircraft is not allowed, except for all these things. For the supply, transportation of passengers, imparting training on flying such aircraft, or for transportation of goods. If I buy a vessel or aircraft for the purpose of transportation of goods, I can take credit of that. Okay. Next, services of general insurance, servicing, repairs and maintenance, insofar as they relate to motor vehicles, vessels, aircraft. Whatever we discussed in the class A and class A, that is motor vehicles, vessels and aircraft, and anything relating to that. If you take, general insurance on your motor vehicle, that is not allowed. When you buy ITC is not allowed. When you take a insurance on that one, ITC is not allowed. And when you get that service, repairs, maintenance, ITC is not allowed. Okay. And again, if it is for that particular specified purposes, you can take the credit of that. And if you are into manufacture of such motors, you can take the credit of that. This is a restriction relating to vessels. And next one, A was there, A was there. Okay, now it is a B. A, B also is there. Now it is B. 17 subsection 5 or B. So, food and beverages, outdoor catering, beauty treatment, health services, cosmetic and plastic surgery, leasing, renting or hailing of motor vehicles, vessels or aircraft. Refer to in clause A and clause A, except when used for the purposes specified therein. Okay, and life insurance and health insurance. All these things, GST is not allowed. So any food beverages, so not allowed. Outdoor catering, not allowed. Beauty treatment, health services, and cosmetic, plastic surgery, motor, vehicle on hire, like cab charges, all those things are not allowed. Provided that input rate in respect of such a goods or services or both shall be available where the inward supply of such a goods or services or both is used by the extra person for making outward supply of the same category. So, if I am into a food industry, so I am a supplier of food and all those things, I can buy food, it's allowed. So, outdoor catering, so my service itself is outdoor catering. I can take input rate from the outdoor catering person. And health services, the same way, plastic surgery, car, vessel, aircraft, and all those. Insurance also. Life insurance, health insurance is not allowed. ITC is not allowed on any of these things. And then membership of club, health and fitness center, travel benefit extended to employees on vacation is not allowed. And provided that input credit in respect of such goods or services or both shall be available where it is obligatory for employer. Okay. So as per the Factories Act, so it is the responsibility of the employer to provide canteen facilities if your employees are more than 250. So in that situation, you can take credit of food and beverages or that outdoor catering services for the employees. Whatever food you buy, that credit can be taken. Okay.
Also has to be read only for the subclass 1 or for the second and third also?
I think second and third also. So you can, for B, full you can take it. Because, if it is for the class 2 or only 3, it's only travel benefit extended to employees. There should not be any provision.
Because I'm referring to first one also.
Yes.
Because for example, if I'm into a manpower supply, I will take health insurance on the employees. I will be rendering manpower supply. So then I am rendering the outward supply also as a part of the composite supply or as a mixed supply.
Yes.
So if the officer argues that the browser is referring only for the subclass 1, then I will
No, see, you don't refer this provision at all. It's only this composite supply or mixed supply is there. No? There only you can take credit.
That's what, sir. There, sometimes one of the officer writes a inquiry that the browser is for the subclass of food and beverages, the catering only is applicable. That is, it is not applicable for the membership of a club or health and
No,
fitness
so
center.
before that, see, I will just answer your question. See, we'll read the first provision for the first clause, the food and beverages. Provided that input tax rate in respect of such a goods or services or both shall be available where the inward supply of such a goods or services or both is used by a registered person for making outward supply of the same category of goods or services or both, or as an element of taxable composite or mixed supply. See, I will take another example. I maybe institute only. Institute conducts the seminars and all those whole day seminars. So I take a service of individuals. I take a service of food. Can I take a rate of the food ITC? I can take that. Because it says if it is a composite supply I make, I can take it.
You are charging to the members.
Yes, I cannot sit my conference people morning till evening without food, without coffee, tea, correct? It's a composite supply I am doing. It is like it is a naturally bundled supply only. When I say it's a conference from morning till evening, they cannot be like no food and all those things. So because of that I can take a credit. Even insurance is also taking credit on that one. See, yes, so maybe you are covered in the here only. We not go to the second provision.
I am referring to the health and fitness center. For example,
Health and fitness center. Health and fitness center.
Fitness center expenditure if I incur for my employees. For example, I am into manpower supply.
Yeah.
And that for the manpower supply, I had to take the health and fitness checking. For example, in that case.
So, what is the nature of expedition?
You can take that, like for example, nowadays these agencies will come, sir, like firefighting agencies are private people, and for them that is required mandatory fitness has to be there. So I will incur some one club I will reach out and I will ask them to provide the services to my employees. Again, I am rendering the taxable supply to my outward supplies. Like whenever the private company comes, you provide the security service or something, I will render the service. I understand that like for the browser is for the first one they are mentioning, but I can read that that is applicable for the class 2 or 3 also.
Yes, I think it is for all the three. Definitely. See, the intention is only for the first only, in fact. See that factories that there are a lot of a couple of advanced wing also there. So if it is.
I believe that they have given a clarification also saying this, but I think we can apply it. The same browser has to be applied for the, you can read along with the 1 and 1, 2, 3 like that. I think it is there.
Okay. Next. Yeah. Yes, sir.
Repairing of
Repair?
repairing of vehicles. Can you explain like this?
No, sir. It is restricted. Repairs and maintenance. Then works contract service when supplied for construction of a immobile property other than plant and machinery, except where it is the input service for further supply of works contract. So any input credit through works contract for construction of a immobile property. So this is not allowed. So what is immobile property? Land, construction of a building, all those things are not allowed. So maybe if you take this hall as an example, can I take a credit on this tiles, furniture, chairs, all these chairs? Yes, these are all not immobile property, right? And what about the fall ceiling and all those things? I cannot take. Then flooring, can I take credit of the flooring? No. Partition, if it is easily, I can remove the partition and put it somewhere. I may take the credit. I can explain to the department. It is not fixed. It's not immobile. I can move these things. Whatever it is immobile, I can take it. And anyhow, this is not applicable to plant and machinery. Plant and machinery, absolutely no issues. You can take credit of that. Okay. And instead of works contract, you yourself employ some people and you buy goods or services and you take a credit of sale. There also, other than plant and machinery, it is not allowed unless and until you are in the same category of business. So there is an explanation for this C and D. The expression construction includes reconstruction, renovation, additions or alterations or repairs to the extent of capitalization to the said immovable property. If I do general repairs, there is no restriction for taking credit. If the same, ITC is relating to the renovation, reconstruction, and I am going to capitalize that, I cannot take credit.
If you don't capitalize, you do.
Yes. Okay, if I capitalize, I cannot take credit. If it is not capitalized, maybe general maintenance and all those things, I can take credit of that. Then next one, goods or services or both on which tax has been paid under section 10. So any competition tax paid, so it is not allowed. Goods or services or both received by non-resident taxable person except goods imported by him. Any non-taxable, non-resident taxable person, if he is not allowed to take input credit except if he imports any goods. So goods or services received for corporate social responsibility. Any GST, any ITC relating to corporate social responsibility, you cannot take credit. It's very, very clear. Before it was not there, so they have amended in latest study. So it is not allowed. And goods or services are both used for personal consumption. So again, personal consumption is not defined by GST Act here. So we have to presume if it is in connection with the personal things. So maybe ITC is not allowed. Maybe a company will give some jacket to the employees. I don't think you can take credit of that. Unless until you are situated in Jammu and Kashmir where it is very much required like that. For performing the official duties, if it is required, you can take credit of that. So otherwise, you cannot take credit of that. So the registration itself is non-resident taxable person. So then goods lost, stolen, destroyed, written off or disposed of by way of gift or free samples. So in all these cases also GST is not allowed. Goods lost, goods stolen, destroyed and written off or disposed of by way of gift. See what happens wherein the stock taking is done. So we found that some of the material input is missing. What do you do as a editor? You tell them to write off those things. So yes, they said yes, we will write off. They will make a entry in the notes to the extent of 1 lakh worth of input is not available or due to some reasons. We are writing off that one. So the moment you write off, what is the GST impact on that one? So you have to reverse ITC on that also.
What is the logic, sir? Because when we bought those goods, we have paid the applicable GST.
First of all, law and GST will not go hand in hand. See, this is what they want to restrict. The provision 17.5 itself is a restriction. Vehicle, sir, why vehicle is not allowed? Without vehicle, how do I come to office? How do I see, especially for professions, why they should not allow? Right? I have to go to my client, I have to come to office, I have to go to department, I have to use my own car, bike, or whatever. No? So I cannot rely on public transport. So why they don't allow? So see, they have decided not to allow. So it's not allowed. See, I tell you, way back, maybe 15 years back, there was a small German company. It was, I think VAT was there 10 years back, or 2004-5 VAT started. That time, some German person had come for a German company. It was not very big, maybe around 10-15 crores turnover. It was software development of some software. So they were discussing, can I take a credit on buying of vehicles? I told, no, it is under VAT law, it is not allowed. They said, yeah, we can take credit in our Germany like that. So even that time only they were allowed to take it. So they used to buy all this product at the year end so that they can take a credit of it. So in India, under the GST law, even now also it's not allowed. So basic reason is, so what is the GST on vehicles, motor vehicles? It's almost depends on the car, right? If it is more than 4 meters and above 1500 cc, it is almost 28 plus 20 compensation cess. Almost 48%, 46-48% we pay. So it's a huge tax we pay. So, but it will impact them also, government also, if they allow ITC on those things. So maybe the reason they don't want to allow. So goods lost, stolen. See, first of all, I have lost goods, and instead of that, I have to reverse my activities. You don't have any choice. Goods are stolen. I have to reverse. And if I give anything, by way of gift, free samples, I cannot take credit. Say doctors, pharma companies, whatever they give free of cost, they have to reverse ITC on all those things.
Sir, what about schemes from
What's it?
schemes, sir, discount or pick up so much quantity, they get too much usually. Not free exactly, that's almost like it.
Sir, end of the day, what happens is, my invoice. See, what they bill, that I can take a credit. Correct? See, it's only my ITC,
So
See,
we can bill for the remaining also and give it credit now?
no, I will take it.
Or whatever extra quantity that they are eligible, we can invoice it and then we will credit now?
No. See, I buy some 5 items and they give 5 free to me. Is that your question?
Something like that.
So, what invoice they give?
Pardon?
What invoice they give? They give invoice for 10 items only.
Yes, yes.
Whatever ITC is there, I can take credit of that.
And then later on, some credit notice.
No, sir, it is, by way of gift, not like that. See, whatever ITC paid, goods, maybe technically I'll tell you, I buy some computers, and after 3 years, all the MNCs has a procedure to scrap that one. So, what they do, they give it those things free of cost. In such situation, what happens in case of computer, I tell you, as per income, as per GST, 5% depreciation I can claim for quarters. Okay, if it is 3 years, I should have claimed only 60%, 40% is still its value is there as far as GST is concerned. So if it is 1 lakh rupee, it's 40,000 rupees there. So I give a gift like that, I have to pay GST on 40% of the value of computers. See, in your case, whatever it comes, it goes, See, 5 items I get, 5 items free I get only 1 invoice. The same thing I give it to free, So it is not connected with this reversal. So any tax paid in accordance with the provisions of section 74 only up to the financial year 23-24. So all these days up to 23-24, any tax was paid under 74, that the GST was not allowed.
You can take credit section 73, sir.
Wait,
74 they are restricting. They are restricting only section 74 payments. If we pay under section 72.
73, if it is within the time limit, you can take. Voluntary payment also, it is covered under the 73 only. See, before department coming into picture, I know that I have made some error, right? I can take credit. I can make a payment and take it.
What is the amendment, sir? 6 in
Now I have to check up.
Last budget,
Maybe, it's 2024 budget, I think.
74 details.
Yeah, it is. Yes.
Sir, if debtors become bad debts, then also you have to be not allowed. Debtors become bad debts, then also not allowed. ITC.
No, sir, see, we are discussing about the inward service. That is only outward service, no? My salary data is my outward service, no? So ITC is only relating to my supplier. If I don't pay to them, I have to invoice. This is other way around. I don't see any ITC implications here. So time is running 17:06. This is over. Then 17:06, 17:05 is over. Okay, whatever restrictions are there, or blocked credit will be over. So 17 subsection 16, the government may prescribe the manner in which a credit referred to in subsection 1, 2 may be attributed. So 1, 2 is relating to exempted turnover and taxable turnover, or other than business purpose. We will discuss in the rules of that. So this one will check up when we discuss the rules according to the process. Then 18, we just come back to 18 later. We'll try to finish some major things. Okay, 18, 19 also will skip for the time being. It's relating to the job work. And 20. 20 is important. It's applicable from 1st of April 2025. IST registration. So, what is IST registration? See, I have an office in Bangalore. I have 3 branches. One in Mumbai, Kolkata, and Delhi. Total 4 branches are there. So all these days, what I used to do. Suppose I get a audit fees bill. 2 lakh rupees auditor will give me a bill. So I cannot take credit of full amount in my head office because it is connected to the branches also. So what I used to do? I used to cross charge. So if all the turnover of all the branches are same, what I used to do? I used to do 50,000 cross charge to my Delhi branch, Mumbai branch, or Kolkata branch. So now this IST is mandatory. I cannot do this activity at all. I have to tell my supplier, I have to tell my auditor, please give bill to IST. So for that I should take the IST registration. If we have the multiple branches, so in a same state or multiple states also, you are required to take the IST registration. It is just like any other registration you take. This is a specific IST registration. You have to take the IST registration. After that, I am taking the IST registration. You have to tell your supplier to give wherever the services are connected to the other branches also. You should tell them to invoice to IST. From there, IST, you have to distribute the credit to other branches. This is all about IST. And how you have to distribute the credit to other branches, we will see in the rules. So, because for example, my auditor in the same city, he charges PC GST rate. So how do I charge to my other branches? Those who are there in the Mumbai, Kolkata and Delhi. So like that, and if my auditor is outside the state, so he will give me ITC bill. How do I transfer the credit to the other branches? That is we will discuss in connected rules and so on.
Just one question. One question.
Yes.
So basic difference in the section 20 is the registration for ISD, which was not there earlier.
Yes.
While the
It was not mandatory, so people found out why an idiot. So why should I take registration? Why should I file a separate return every month and all those things? So I should do a cross check, and the department also accepted. Okay, no problem. End of the day, the other branches has to get a credit. So other branches are getting credit.
So the cross charge will still happen now as well. The only difference is that it will be through the ISD registration norms.
Yeah. See what happens. So see, for example, I will tell you the other things. There is some. See, for example, okay, goods I take. When I supply goods to my other branches, I charge GST, right? In the same way, if I provide any services to my other branches, I should charge GST on that. Except, there is some circular says HR charges need not be cross-charged to the other, branches. So if there is specifically, charges are there. See, for example, some few employees come here, they use a hotel or something like that, and I have to charge that one to my other unit. I should charge that. That time, maybe not IST, I should normal cross-charge again. Only specific cases where all the branches are involved or multiple more than one branches are involved, I have to do this IST process.
It applies only to services.
Yes. This is input, service, distribution. Service distribution. Distribution method and all those things we'll see rules. It's clearly explained. And section 21, so suppose if I have distributed more credit than what I have, so how they can recover that ITC. So it's a general process. Okay. And this is all about 16, 17, 18, 19, 20, 21. These are the 5 sections dealing in ITC. With CGST Act, Chapter 5. So we'll just run through the rules also. It is not only sections, we should also refer to the rules. Rule 36 starts with, it's also Chapter 5 of CGST rules. Okay. So documentary requirement and permissions. So what are the documents required for taking the credit? So invoice issued by the supplier, maybe debit note issued by the supplier, bill of entry in case of imports, IST or IST credit note in case of IST distribution. So mandatory details in the documents. ITC can be claimed only if all the required details are present in the document. Whatever I invoice, I receive. I should have all these things. The tax amount charged, description of goods, taxable value of the goods, GST of supplier and recipient, and place of supply if it is interstate transactions. If these are the documentary requirements to take a credit. So we are discussing about section 16. Correct. If it is for the rules of business, you can take credit. Correct? And then we discussed in 17, 1, 2, 3, and 5 some restrictions. Here, this is a documentary. Documents required for taking the credit. In support of those sections, this is the rules procedure things. And ITC restrictions, ITC cannot be claimed on the tax paid due to the fraud, misrepresentation. There's whatever section 74 till 23, 24. So ITC cannot be claimed unless until vendor uploads the return and also he pays the taxes and pays the return. Will come to that further. 37. Reversal of ITC in case of non-payment. We discussed section 18 4, sorry 16 4. That is, if you don't make a payment within 180 days, so rules related to that. So fails to pay to the supplier within 180 days from the invoice date, I should reverse ITC. And again, when I make a payment, I can take the credit of that. So interest also I have to pay, whatever we discussed. And there are some exceptions. So there is RCM payment. Say RCM, I only make a payment. So in such situations, RCM is not required to be reversed because of non-payment to the supplier. Like I receive auto credit service and case is not closed. So only he has given, I have accounted, I have made RCM payment. But I have not made a payment to my advocate at all. There is no requirement of reversal of that. And also, if I import something, so I don't pay to the supplier. but I made a payment to the government. I can take credit of that. There is no restriction for that. And reclaiming of the ITC after payment. So I have not made a payment. I have reversed with interest and all those things. Subsequent month again, I make a payment to partner. I am allowed to take credit of that. Okay, this is about the rule 37.
Non-reversal of 180 days. What is the consequence apart from the interest?
Only interest.
If they don't do, say, for 1 year also.
Interest plus tax.
For 1 year.
And there can be a penalty also under section 73 or 74 or 74A.
Penalties.
Yeah.
General penalty or this is
So penalty is compulsory, in GST. See, suppose I find out myself and I pay before they ask, then no problem. 73, 10% penalty is there. 74, 15 is there. Then I think 2-3 cases is there. If it is order is passed, then also I don't pay. I have to pay 100% penalty. 74. Then rule 37A, reversal of ITC due to non-payment of tax by supplier. See, in 16, just a recap. See, 16 subsection 2 clause C, the tax charge in respect of such a supply has been actually paid to the government. My supplier should have paid the tax to the government. He should have filed the return. Which return? Outward supply return, GSTR 1, he should have paid the tax, and he should have also filed GSTR 3B, whatever is there as per section 39. So, we'll go back to the 37A. Rule 37A says, reversal of ITC due to non-payment of tax by supplier. How it is to be done? First of all, how do I know that? I should check. I should check. I should know. Otherwise, it will not come to matter whether he has, paid the tax, filed the return. Maybe sometimes he should have paid the tax, but not filed the return at all. Maybe some technical error or whatever it is. So, we should have done both. Then only I detect. 37A talks about the reversal of ITC due to non-payment of tax by supplier. Okay. So, the reversal must be done on or before 30th of November. So, I should reverse before 30th of November. If I don't do by 30th November, then the interest starts.
So practically, how are people ensuring this? Because one person can have hundreds of suppliers of services.
You have to cross-verify, sir. There is no any solutions for this. You have to check out whether they are filing return properly or not. Suppose, see, latest week, 2 days back, one of my clients got a notice. Your supplier has not paid the tax to the extent of 4 lakh rupees. If we found out that in their books that you are, they are providing service to you, so anything payable up to 4 lakh rupees, you please pay to us. So they checked up their accounts. So only 1 month payment is pending, 25,000-30,000 rupees. Then I told them, okay, go ahead and give the letter. They said, only this much is there as of now. You take this one, and if anything we are accounting again further, I am going to pay balance also.
But the department can issue only after 30th of November. The time is there up to 30th November of the.
No, see, generally time of processing. Say whenever they take up audit under section 65, that time they come to know whatever details of not payment and all those things. So that time they make issue of it. If you have not paid, so and I told him, so are you ensuring your supplier are paying taxes properly and filing return? I told them, so check regularly. All the parties are making a payment and all this. We see only GSTR. See what happens. I'll tell you one more. Control here. GSTR 1 is filed. GSTR 3B is not filed. So, okay, suppose I receive the same invoice subsequent month also. he could have not filed next month GST 1 also.
Yes.
Because GST 3B cannot be, GST 1 cannot be filed without filing GST 3B. So we can find out, like that.
But in GST, it has not shown that amount.
That is not our duty, sir. See, that is a fraud. See, even if it is a fraud, definitely, if anything payable by us, they will come to us only. Anything due from us. Fraud, nobody can. It's a reasonable, care we can take, not beyond that. So,
One question.
yes, sir.
So in that example, so notice was received for that 4 lakh rupees, and you said that we have taken only 30,000 worth of services.
Yes. No, I have been paying him. So as of now, what is payable to him is only 30,000 rupees.
To the first line.
Yes. Only that 30,000 rupees I can pay to the government. I cannot be made responsible for his land. But I can pay whatever is payable is there, I can pay to him. So even in income tax also we have a similar provisions.
Okay, so the tax amount which was to be paid on the...
Not tax amounts, total amount whatever payable to other party. Whole amount they can ask for making a payment. It's a connected cases, no? So you have to pay to the government. And see, I reverse by 30th November, and if not, I have to pay interest. After that, after next 2 months, they make a payment. I come to know that they made a payment subsequently. So I am allowed to take a rate of that. Okay?
So in every cases they will come to know after 1 year only. See, before September we are not, in December we would have paid. How would they deal with it?
So that time it's only interest portion. See, end of the day, don't do anything. So maybe department, if they find out at the time of audit and all those things, they may say in 2-3 months you have not paid the interest. Pay interest on that.
One of my cases, they disallow it even we pay such.
No, why? No.
So as on that day you have to pay, that's what.
No. See, even that 37 also, 180 days payment. So I have not reversed. Right? And later on I made a payment. They can ask interest for the intervening period. They cannot ask me to completely reverse it. So this is 37A. Then ITC by banking company.
Sir, I have ISP distribution. ISP can be distributed.
So we will come to ITC distribution. ITC, by the banking companies, I said they can opt for that 50% scheme. So they can take a rate of the 50%. So they have to opt for that. So the same thing only. Okay. This is the 50% received. Unless until I take option, I cannot get this option blanket. So otherwise it is only the exempt turnover and taxable turnover. So this is a procedure of distribution of ITC by the IST. So monthly ITC distribution, ISTs must distribute IST in the same month it is available. So if I receive services from my supplier into IST, I should distribute the ITC in the same month. And we have to file the return GSTR 6. Okay, and separate distribution of ITC. So eligible ITC and ineligible ITC has to be separately distributed. Sometimes there may be ineligible ITC. So ineligible ITC I should distribute separately. Okay, and ITC of CGST, GST, UGST or IGST must be distributed separately. I will just explain you further. And formula based ITC distribution. Generally, based on the turnover, you can distribute to the all branches. So ITC distribution of CGST and GST, CGST and GST I have received. Okay. And if it is intrastate, I should distribute CGST and HGST. If it is interstate, I should distribute IGST. So I said my auditor is in same state. I get CGST, HGST invoice into my IST registration. So I have some branches in this Karnataka also and some branches outside. So how do I distribute? CGST, HGST I am getting no. So intrastate, CGST, HGST I have to put. If it is interstate, I have to distribute IGST. Okay. And if it is IGST credit I am getting, like my auditor is outside the Karnataka. So I have to distribute only IGST that time. Both intra as well as interstate sales or services. Sorry, service, no sales. Clear? And some debit notes, credit notes, and corrections, all those things. Basically, it is CGST, HGST. You distribute the CGST, HGST. If it is intrastate, IGST. If it is interstate, if you receive IGST, you distribute IGST only, both intrastate as well as interstate. And rule 40, section 18 also we'll just try to cover later if time permits. And this transfer in case of mergers and all those things, this is what is there, ITC 02, we have rule 5, we'll see later. And this is transfer of ITC in obtaining the separate registration between the state also, this we'll see later. This is one rule 40 to 43. ITC reversal common credit.
Sir, I have a doubt regarding rule 39. Like, for example, I got an invoice in the month of May, but in the records I'm recording in June. So I got a notice like you got the invoice in May, but you utilize in June. So it's not distributed in the same month. So I can say like, no, I have posted according to section 16. There is a fourth club, D club, like recorded in the books. So according to the section 16, I can claim like I have posted in later period and I distributed in that period only. So
I think you have to avoid that one better because it already comes into IST. No?
yeah, but we recorded later. Just because the invoice number, we got a notice. So based on invoice number, we can approach.
At the end of the day, if it is no harm to government also, if it is it's only distribution, there shouldn't be any problem. But rule says you have to distribute in the same month of when you receive it.
Is the date of invoice or the date of posting? Like, but we saw
Date of credit to the IST. Rule says like that. Practically, I know definitely there will be some difficulties because I cannot account the invoice in the same month and all those things. Rule 42. See, we discussed section 17.1 and 17.2. What happened in 17.1 and 72? I take a input credit, but for business purpose as well as other than business purpose. 17 subsection 1 and 17 subsection 2 deals with ITC in case of exempted supplies as well as taxable supplies, which includes exports also. Okay. How do I reverse my ITC? So let me explain first this only with the figures, then we'll read about the theory part. So in this one, I have assumed 1 lakh rupee as a total input credit. So in rule, if you go to the rule, so everything is at T1, T2, T3, C1. The same thing I have, I tried make it simple. Okay. So total input rate I have taken as a 1 lakh rupees. Out of that, So ITC for non-business purpose is 10,000 rupees. And ITC for exempted supplies is 20,000 rupees. So I have assumed here, one third of my turnover is exempted supplies, and 2/3 is my taxable supplies. So whatever exempted supply I have, for that ITC is 20,000 rupees. Okay, and eligible ITC, ineligible ITC is 10,000 rupees. Okay, and 1 lakh minus ITC for non-business purpose, and ITC for exempted supplies, and ITC for ineligible ITC is 60,000 rupees, that is denoted as C1. Okay, and next one, ITC exclusively linked with the taxable supplies. I said ITC connected with the exempt supply, you cannot take credit. ITC connected with your taxable supplies, completely credit you can take. Okay, that is denoted as T4 and 30,000 rupees. So let's don't go by T1, T2, T3. You just go by amount. 1 lakh rupees the total ITC. Out of that, 10,000 for non-business purpose, 20,000 exclusively for exempted supplies, and 10,000 for ineligible, and 30,000 for exclusively for taxable supplies. Okay, and what I am getting finally is 30,000 rupees. So total 1 lakh minus 60,000 rupees. Out of the 60,000 rupees, 30,000 rupees also, I can take credit of 30,000 rupees. Balance 30,000 rupees is my common credit. So end of the day, what is that proportionately I have to disallow is only common credit. This is the process of filing the common credit. Other way you can just find out saying that okay, we'll just tell you some other formula. Okay, and I said 1/3 is my turnover of exempted turnover. So out of this 30,000 common credit, 1/3 is the exempted turnover. So 10,000 is ineligible ITC due to this exempted turnover. Got it? And 5% of the common credit we have to add it to that because we have a non-business purposes. So 5% of that 30,000 is 1,500 rupees. So total ineligible common credit is 11,500. So eligible common credit 18,500 rupees. So any doubt?
5% of B2C.
5% of common credit is we have to add to the ineligible due to common credits. 10,000 rupees, whatever we take, we have to add that 5% of the total common credits. See, this is applicable only when you do both taxable turnover and exempted turnover. So taxable turnover, as I said, so suppose you are the holding company and you give a loan to subsidiary companies and some charge interest, correct? So whatever interest you charge, is it not an exempted turnover? Yes, it is exempted turnover. You sell land, you sell building, is it not exempted turnover? Yes, it is exempted turnover. So you are required to do this process. It's not that only I deal in completely taxable goods. This provision is not at all applicable to me. It's not so. So there are several situations. Whatever I said, this provision may be applicable, and you have to reverse this. You have to calculate and do a reversal under Rule 42.
This exercise is carried on monthly basis or yearly?
It has to be done monthly basis, and you have to review again for 6 months. And again, if there is any reversal and all those things, you have to do it again once in a year. You have to do it.
And when we do the reversal, we need to pay interest on that?
Not required. Maybe strictly speaking, payable. But if it is, even though if you don't do it on half-yearly basis or annual basis, it's okay. I can say end of the day, if department is trying to find out, let them find out. They will never get into all this so much, they will ask only, have you reversed under rule 42 because you have some exempted turnover. Then I have to say, see, you please record my LTV every month, I am reversing. So matter gets over. They will say, yes, fine. And see, in other way, I have put it, step 1 to find out common credits. So your total ITC minus ITC exclusively for exempt supply, then ITC exclusively for taxable supplies, then ineligible ITC plus ITC for non-business purpose. You add up all those things and you reduce from total ITC. You will get a common credit. Out of that common credit, you find out what is exempted supply and total supplies. So proportionately you do whatever amount you get. For that you add 5% of that common credit amount, and so that is the amount we have to reverse. And I said, so exempt supply means loan may be given to the subsidiary, or you may have actually exempted goods turnover, right? But rule 42 provides for if it is merchant trade, if it is IC sales, and if it is a sale of scripts. In all these things you need not reverse rule 42. Okay? For example, merchant trade. What is merchant trade? I sell my supplier in US to ship to UK. It's a merchant trade. Okay? In that scenario, I get my exempted turnover, and I also have exempted inward purchases like that. Both are no GST because the transaction is happening outside India, but it comes in my books as a exempted turnover. So you are not required to reverse common credit because of this merchant trade. And also IC sales. Before goods come to my country here, I will transfer my title to the goods before it reaches my Indian shore. Okay, that is IC sales. So even in that scenario, I am not required to reverse ITC because of this rule 42. Common credit versus is not required. And scripts. So in case of these government schemes, MEI schemes, RODTP schemes, government gives some incentives to us. So that they are incentives in the form of scripts. I can use that script for the purpose of making a customs duty payment and all those things. Or I can sell those scripts. When I sell, previously it was taxable, 5% was taxable on the lease scripts. Now it is exempted. So I get an exempted turnover in my books. I have to declare in GST return. But so you need not consider rule 42 and 43 for this these scripts exempted turnover. Okay. So this is rule 42 and rule 43.
Excuse me, sir.
Yeah.
Sir, when we talk about those exceptions,
Yeah.
Schedule 3 transactions are not to be treated as exempt supply.
Not full Schedule 3. Only.
Yeah, I was coming there. So 8A, if you are selling
Yes.
warehouse goods, then you will have
Yes.
to do the ITC reversal.
Yes.
But now that amendment has come in form of 8AA, sale of goods from ECZ or FPWs, right? So how, practically are ITC reversal question from sale of goods from SEZ and FPWs or nothing has come on that? Right?
No, that's also exempted, correct?
Correct. 8AA, so it comes under
Yeah.
no supply transaction.
Yes.
But if we go under a strict interpretation, it covers 8A and not 8AA. So are the officer demanding reversal on 8AA transaction like sale of FPWs transaction as well? Or
No. See, whatever is there in section, which section? Whatever is there, only 8A is there in the section.
Correct.
So if it is not A, it will be.
But is there not conflict, sir? Somehow is that not sale of warehouse goods or there is clarity on 8A and 8AA on that?
Maybe it may be corrected in the due course, but as of now, no exemption.
Thank you.
So next, rule 43. So this is relating to same exempted turnover and taxable turnover, but it is on the capital goods ITC. So I have some capital goods which I use exclusively for exempted supplies. I cannot take rate of that one, and again I have the ITC relating to capital goods relating to the taxable turnover. I can take rate of completely full on that one, there is no question. And there are some ITC on the capital goods where I use it for exempted turnover and taxable turnover. So the reversal is given here. So common credit of the goods, the total credit divided by 60 I have to do. What is that I have to reverse during this month? So I have to take total credit claimed on the capital goods and divided by 60 in this particular month. Whatever ITC reversal to be done I will get, and again proportionately to my exempted turnover to the total turnover I have to do this. Okay, this is rule 43. And I will skip this one. This one also will skip. And practical application filing of GSTR 3B. Okay. So whatever we studied now, whatever we discussed, all this section 16 to 21, 35 to 40 to 43. So all those things have to be applied in filing the return. 3B return is the only return where we can claim the ITC. There is no any other return where I can claim ITC. If it is missing in ITC, it is very, very dangerous. So you have to be very, very particular about taking credit in GSTR 3B. So anyhow, we have till November time to take the credit. So you have to ensure that you take credit before November. So filing of 3B, see, there is a couple of things important here. So before I think 2022, so there was no concept of permanent reversal, temporary reversals. So we'll just study those things. We just go through that one. So import of goods, import of service, then import of inward supply other than above, then IST input credit, and all other ITC. All other ITC is a very important here. And out of total ITC, whatever we get as per 2B figure. See, now we have IMS also, correct? See, in IMS, what happens? Either you can, if it is not many transactions, you can accept, reject, pending, you can do whatever you accept, that alone comes in the all other ITC. Then you need not worry about permanent reversal and temporary reversal. You may have to do permanent reversal. Temporary reversal you need not do. But suppose you have a huge transactions, not able to do one by one selection of accept, reject and pending, then you have to import everything, then whatever is there in the 2B figure, it will come in the this 4A file, all of the ITC. There everything comes from there again, this 4B1, 4B2 you have to do. That is permanent reversal and temporary reversal. And again, so we'll just see what is a permanent reversal. So reversal by banking company or financial institution, so rule 38 that comes to the permanent reversal, and partly rule 42, 43, whatever just now we discussed, everything comes there, and 17, file ineligible credit. Above ITC is reflected in 2B, 4B1, correct? 4B1, so it's a permanent reversal. You are not going to get back that one again. It's a permanently reversal. Okay. And next 4B2 is the temporary reversal. So what are temporary reversal? Rule 37. So 180 days the payment. I am not made payment now, so I have to reverse my ITC. But it is not permanent. Whenever I make a payment, again I am allowed to take credit of that. Right? So that comes under the temporary reversal. And next one, ITC received as goods not received in the same month, next month. So my supplier has uploaded already in the same month. I have not received the goods at all. I cannot take credit from. So but 16 subsection 2. So I can take credit in the subsequent month. So 2B figure is already there. So I have to do a temporary reversal for that. And next is the ITC reversed as supplier has not paid the tax. 16 to E. Suppose he has not paid the tax at all, so I come to know maybe the November, at least November, I have to reverse that. So, and later on he is going to make a payment again. So when he makes a payment, again I should be allowed to take a credit. That is all temporary reversal. So when you do a reclaim of that temporary reversal, you have to report in 4D1. It's very important. 4D1, you have to reclaim that credit. See, this process you have to strictly follow. Otherwise, definitely you will get a notice. Notice of the moment you file the return, you get a notice. If you don't reply to that notice, you will not be allowed to file next month GST 1 also. Very careful. See, what is important is all other ITC. If you take all other ITC as per your books, which is not as per your 2B figure, then definitely we have a problem. So it has to be 2B figure and reduce from the permanent reversal, then temporary reversal, and reclaim temporary reversal in 4B1. When you do a reclaim, that amount has to be added to 4A5. Clear? Whatever I reclaim, because I have to add to my credit, no? So it has to come to my credit. If I reclaim in 4B1, but I did not show in my return, I am going to miss that credit. So I have to do 4A5, I have to add that one. Yes, sir.
So in reversing the 17.5 credit, some mistake has happened. How to reclaim?
No, 17.5 reversal, no reclaim. See, if you have a doubt about that one, do a temporary reversal. Okay? Don't do a 17.5 reversal. Maybe you feel that, maybe some ITC you have taken whatever it is. You feel that, I may take the credit of this one. Maybe auditor may object for that. Whatever it is. So if there is any doubt, you do temporary reversal. So when you do a temporary reversal, you can claim back again in 4D1, add up that one into all other ITC, and later on you found out that it is a permanent reversal only. That time again you can show under 4B1. Okay? So this is all about permanent reversal and temporary reversal. So any doubts?
So if we reverse something temporarily in 4B2, it keeps getting accumulated. And the department says something should not have gone in your 4B2. You please reverse in 4B1, otherwise you will not get the revenue. Any such cases where
Come again, 4B?
when we reverse something in 4B2, it is getting accumulated.
Yes.
The department is able to track that.
Yes.
Let's say a period has passed and the department is telling me you do the reversal, whatever you have done in 4B2, you do it in 4B1.
Yes.
Otherwise you won't get the revenue.
Yes, you can do that.
But will that not create a double ITC impact?
No. So you have to add up to all other ITC in that particular month and reverse that. See, end of the day, I'll tell you, sir. See, when department people come to you or for any this audit notice or to that matter, your normal auditor or whatever it is, they will ask you, give me input credit register for the net ITC. What ITC you are claiming here, total of 4A, 1, 2, 3, 4, 5. What is the net ITC? I mean after reversal. Net ITC, what is going into your credit ledger. For that you should be able to provide the details because there will be so many ineligibles, so many reversals, reclaim, there will be utter confusions. So you need to provide for the net ITC available for C. You should have a ITC register for that. Then it will be simple.
But sir, I have already reversed it.
Yes.
I will take it in the net ITC figure, but law nowhere is saying that you should have done it in 4B1, but you have done it in 4B2. It's the law.
Is it not like a permanent reversal?
I reversed, it came in a net ITC. But
Yes.
the reversal amount they'll be able to see in the portal that it is under 4B2. Law nowhere is saying you put something in 4B1 or 4B2. You have already reversed something. I'm not aware, it is not in my net ITC. Then why should I do the exercise of
No, sir.
something in
4B2 is for reclaiming, no?
4D1 is for
No. 4B12 is there, correct? 4B1 is permanent reversal. 4B2 is the temporary reversal. See, and 4B2, if you are putting it is a presumption that you are going to reclaim that. How do you reclaim? Only again add up to the 4D1 and also add it to the 4A5. But if you are putting it in 4B2, it is always temporary reversal. It is the intention is to reclaim that. Okay.
So, as an example, there is a surrender of the registration by the client. So, in that case, whatever the total balance which is there for IGST or CGST, we will just put this into the 4B1 as a permanent reversal, right? That should be the method. So, whatever the balance is there, we just reverse because that's something we have to give it back. Not give it back means we have to reverse. Because you are surrendering.
Actually, then the other sections are there dealing with that one.
So it is for
I did not take out. So we will have see, ITC reversal in special cases, section 18.4. It is there, in fact, you can just go through that one also. Because it covers what happens when you cancel the registration, how you have to reverse and all these things. So this is all about rules. So I'll just try to take 1 minute. Case study. It's not a case law. It's nothing big and all those things. It's a simple case study. See what happened in one of client case. They made an error in GSTR 1 filing. They took a wrong credit. In 17-18 time. And what happened later on, department issued notice. So you have taken IGST rate of so much. So you have to pay that. So the error was such that so every month they will 1 month around 70 lakh rupees credit they have taken. But they used to find out a separate liability in a separate Excel sheet. Based on that, they used to make a payment also. The cash balance was there. 70 lakh rupees they have taken wrong credit, but over a period of time the accumulated cash balance was 70 lakh rupees. They have not noticed at all. And when we were doing the audit, we noticed. So the wrong claim is there because there was no any invoice at all for that. Some 70 lakh rupees was some wrong credit has come in the IGST form. And later on the money was there. We reversed that. Then department was asking interest on those things. Because we have utilized also, and we said the cash balance is there in your own account, so why you want to make the issue out of that? So they said cash balance is your valid balance, so we don't know anything about it. You can take back the money also because so that moment of time, the Yamaha India case was there. Whatever cash there in your cash ledger is not department's money. So later on it was amended. I think in the last 1 year, I don't remember exactly, it was amended. What we did was, so we decided to file the appeal. So we know what I felt, definitely there will be some relief in the further. So we got relief from the two issues here. So we filed appeal, we got a bill in our favor. Otherwise also, see now the amnesty scheme has come. The interest was almost 14 lakh rupees. So amnesty scheme is also there 17, 18, 18, 19 and 19, 20. So any interest payable, so we are not required. So anything like this, you can plan the things. So you can say that, you can fight. There is no point in paying the tax and close the case. If you feel, you can fight. Some relief, because the law is still evolving in the stage. Even though it is almost 7 or 8 years old, it's still evolving. So you can take a calculated risk sometimes. And this year, tax is already reversed. Then only interest portion. Interest portion you pay now, you pay after 5 years, it remains same. There is no interest on interest in GST law. Right? So because of that, we took a decision to file a appeal, and also we got a relief there. So like this, we can plan the things.
And the relief, the total interest was cancelled. And what was the basis they cancelled that interest? Because the cash balance was there.
No, the law amended. Even the cash balance, on that cash balance, there cannot be interest.
But that is a retrospect, not a retrospect.
Yeah, it is section 15 is retrospective only.
You are referring to the amendment made in the registered treasury return, where you can deposit the cash balance and I am utilizing out of it. Even if I delay the treasury return, there is no interest.
Yes.
There is amendment. So you
Yes.
are referring to same process.
Yes, yes.
That is a prospect to change, sir. So, like, the government has accepted the analogy of it, or else like how, what basis they are accepting it?
No, it is retrospective. I think the cash balance, whatever is there. See, because I have, the cash balance is there with them only,
It is this, I understand. If you apply the same analogy, the main intention of the government is same, I understand.
Yes.
But I believe that it is a prospect to change because I have seen.
No, because any relief given, it's all retrospective. See, any relief in the tax, so generally it will be retrospective.
So that is your first appellate authority or second?
First appellate, second appellate is not there.
Order of first appellate authority.
Sir,
Because we can use the.
it's not adjudication, it's the first appeal only.
First appellate.
Yes, yes. Got
So
it.
that's what like this kind of cases we can use for the.
Yes.
the industry, so that-
Yeah, so you see, wherever you feel that, there is a case, you just go ahead and file the appeal.
Yes.
Definitely you will get a relief. 2 points. One, maybe the authority only, appellate authority may give the relief, or there is a chance of, amendment or retrospective amendment or some relief will be given based on the two related acts. So we conclude. ISCON.
One last thing can I ask?
Yes, sir, yes.
Maybe useful for the other people.
Yeah.
We discussed about the rule 37. Payment not made within 180 days. In case of the construction, there is a concept of equal in amount, 10%, 5%, they will be there. They will not pay. Obviously, this project will be to them. That is an industry practice. Is there anything can we do about it? Is there any stand anybody
No,
can
no.
take?
Law remains same for across all the.
Amounts also very.
Maybe industry practice is there. See, industry practice sometimes I pay after 8 months.
Yeah.
Right? Then what happens? Can I take that as a defense? No. I have to reverse after 6 months.
Then I have an option to claim back as well after 8 months.
Yes.
In that section,
Yes, sir.
in that section, if you read fails to pay, go to the Indian Contract Act, there is no liability, there is no failure on me, on my part to pay that contract. Can we take that step?
Come again, sir.
If you read that section,
Yes.
it starts with fails to pay to
Yes.
the supplier.
Yes.
So if you take my contractor, my liability to that vendor maybe 7 months, 8 months after that only I will be paying, or in this case, withheld of 10%. So that withheld of 10%, as per the contract, there is no failure on my part to pay that vendor.
Sir, rider is 180 days. It's not failure, only failure.
Pay to the supplier.
Within 180 days from the date of invoice. See, if it is not there, only failure to pay is there, then I can accept. Failure to pay within 180 days from the date of invoice. Rider is there, no? 180 days is there.
But there is no failure on my part.
Yeah, there is no failure to pay. It is not a bad kind of see, we have to see also from the point of view of lawmakers. What is their intent? Their intent is not everybody has to make a payment before some specified time. See, maybe you are right in the interpretation, but when you go to the intent of lawmakers, it may not be. That time may get problem. See, they may issue a circular or something like that. You know that construction case, no? What is it?
Safari.
Safari repeat. So immediately they brought retrospective amendment only. What is the intention of lawmakers? They don't want to give any credit relating to the construction of immutable properties. So in that situation, definitely they bring some circular, some notification and change the law from 2017 only. Anything else? Yes.
We have imported some goods free of cost, but still we have paid IGST along with customs duty. That IGST can be claimed or
So this 180 payment is not applicable for imports.
but we have purchased free of cost from the importer.
See, if you ask me personally, we should not take. Because it is a free of cost. And you should not take credit on those things. And what is the purpose of that? You are not using it maybe for sample or something like that. No? You are not using in the normal course of business. Maybe if you see, in order to avoid litigation, so don't take it. So if you are okay, if it's a huge amount, if you are okay with the litigation, you can take it. But definitely there will be a problem, and see, department should get to know also about that. See, if department is not getting to know, fine, so no worries. But see, how we conduct seminars and all those things, even department also conducts seminars and all those things to the staff. They also know the different provisions, the latest changes and all those things, and how people avoid, they will discuss. So, if according to them it is free sample, how can you take a credit like that? So they can be issue.
That is imported because of occurrence of business only.
Of
There
course.
is no condition that like I have to make a sale.
Yes, definitely, yes. Yeah, if that is analogy, definitely you can take credit. Yes, I agree.
Because on top of it, I am paying out of my pocket, even though that is a
Definitely.
I am importing it because of
See,
occurrence of business.
if you see the section 2, subsection 62 also, it very clearly says on import whatever you pay, that is your input rate.
That is the case, even import of imports under section 64 time limit also not applicable. I am claim even
Yes.
after.
Yeah, I don't make a payment to the yes. You can take.
Even normal claiming also, sir. Because I am claiming based on the bill of entry.
Yes.
Section 16 is telling us that tax invoice or debit conduct. It is not talking about the bill of entry.
Yes.
So I can take even after 16 for time limit also. Same thing will be applicable for the self invoice RCM also. Wherever I am taking the RCM supplies from the unregistered person, I can make the payment even after 3 years also.
There is no condition.
I am liable for the interest.
Yes,
I am
correct.
accepting it, but I can pay and I can claim that.
Yes. There is no condition of making payment within 180 days in all such cases. Is anything else? Thank you. Thank you for your patience.
Members, let's take a minute to thank the speaker. Please hold on ourselves. Before I make the vote of thanks, I would like to give few of the announcements of the programs that are being scheduled in the coming weeks. 3rd May, we have a cricket tournament for the chartered accountants, which is being there this Saturday at DICC ground, Infinity Grounds, Magli Road. Apart from that, as usual, we have the study circle meetings on 7th May on general information and technology controls. On 14th May, where both on global capability centers, opportunities for chartered accountants, specific focus on indirect taxes. On 25th May, we have recent judicial developments focused on section 68 and 6090. And on 28th May, we have maximum productivity, advanced time management and organizational strategies for chartered accountants. So, with this, so thank you for your deliberations. I think on ITC Simplified, hope the members benefited out of today's study circle meeting. May I call upon Chairman Sir, Sri Manjunathan Malu, to present the memorandum to the Speaker. Members, let's have a round of applause to the Speaker. members. Without your participation, it would not be possible for us to hold these study session meetings. Thank you one and all. Have a good night.